Good morning, everyone. Good morning. Hope everyone's doing well. Today, we're going to do the weekly outlook for June the 16th to 20th. A lot of things to go over coming into this week. We just had some contracts roll over for the futures. We have FOMC coming into this week as well. That's going to be on Wednesday. And then we also do have a market holiday. Market holiday on Thursday. It's Juneteenth holiday. This is a different one where it always has that holiday midweek. So we'll kind of talk about this here before we go on to the Red Folder news event and the outlook. Good morning. What's up, everyone? Good morning, B Roots. Good morning, Jeff, JTKO, Kine, Miriam, Centurion, Melissa, Seamus, Josh, Andreas, Tan, Ryan, Cuba, Robert, Monty, Damien. Good morning, Audrey, Corner. Good morning, Martin, Wayne, Daniel, Mozzie, Cupid, Ashley, Paul, Jorge. Good morning, everyone. Joshua, Envision, Lauren, if I pronounce your name wrong, by the way, that's my fault. What's up, Martin, Raymond, Flying, Kel? Yeah, good morning, everyone. Let's get into the weekly outlook and see what we're looking forward coming into today. Before we do that, let's get talking about the key economic events coming into this week. So the key economic events for this week, we do have core retail sales. That's going to be at 8:30 tomorrow. And we also have unemployment here on Wednesday, just because Thursday is a it's a holiday with Juneteenth. So we have unemployment Thursday, 8 a.m. Eastern Standard Time. We have FOMC. This is going to be the big one coming to this week at 2 p.m. Eastern Standard Time, along with Jerome Powell speaking at 2:30. So that's going to be on Wednesday. And then Thursday is a market holiday. So it's going to be closed. And then Friday, we don't have anything on Friday. So with that key economic events out of the way, let's head on to the daily chart here for the ES. All right, thesis for this coming week. Currently, the markets are maintaining structure on the higher time frames. What I like to see is the higher lows be built. The key level for me will be last week's lows. I do expect all dips to get bought up unless we have some major news event that affects the market. So for the ES, let's start off on the daily chart. We currently had the contract rollover. So if I get rid of this, as you can see, what we have, we got rid of the drawings here for the ES. And currently, we just actually had the contract rollover. So we had the contract rollover happens once a quarter, where the contracts will now switch to the next quarter's contract. So in this case, if I actually turn this off, you'll see a lot of people sometimes ask me what I have, if I have on the contracts adjust for contract changes or I don't have them on. So it's on the bottom right, as you can see here. If I click the this button right here, which is adjust for contracts, if I have it turned on, which I personally like have it turned on, right, you'll see that we just kind of opened up at the bottom and you can see we kind of rallied towards the upside. If I turn this off, you'll see that it has this gap in the market, and now you can see the markets are back up and towards your last week's highs. I personally like having this turned on so it adjusts for the actual contract changes in itself. If I go back into the daily chart, you can see so far, higher lows are still being built in the market. I'm still bullish here on the daily time frame. What I would like to see now is the reaction that we have off of your last week's highs. So let's go on to the 1 hour time frame and turn back on the drawings now. So key levels coming into today that we have marked out. Number one, we have your 59.90s. This is your last week's lows, and this is the level that we're holding so far. As you can see, markets big drop on Thursday, Friday, you end up finding a bottom here. And now you can see coming into this week here as well, we're not pushing back towards the upside. We're about 1.5% up here in the pre-market, just right back into the area we ended up dropping here from Friday. So coming into today, this is going to be the key level for me. It's your 60-70 here on the ES. What I would like to see for any sort of upside coming into this morning is the break above your 60-70, a hold of your 60-70 for this continued push back towards the upside. Sorry. So this is going to be the key level for me, 60-70 here for the ES. That's going to be key for more upside, as I mentioned. If we do reject off this level once again, there is a possibility that we could just gravitate back down in towards your previous day close in your 60-30 here for the ES. There's a good chance, as I mentioned, if we can break above this key pivot high, which is this lower high pivot point, it would invalidate this lower high structure, and then we could see this push back towards the upside. That's what I'll be looking for primarily, just because the overall market is bullish. So we will see the reaction that we have off your 60-70. Let's go into the SPY chart. Similar thing to the SPY coming into today. What we do have here marked out is going to be your 600 key psych level. We also have the low of the range, which is your 595. So for the SPY coming into today, we could honestly even readjust this here as well to this level if we'd like. It's basically the exact same area for the SPY. Your 600 key psych level. What we like to see now is the break back above your previous day highs on Friday, a hold of your 600 key psych, and we end up pushing back up in towards your Thursday's highs and potentially your last week's highs here, which is your 605 and above. So those are the key levels I have for SPY. As I mentioned, if we do reject and stay heavy underneath their previous day highs, there's a potential we gravitate back down in towards our gap fill, being that 597. So those are the levels I have for SPY coming into this morning. Let's go on to the NQ chart. NQ, fairly similar thesis along with the SPY. Thesis for this coming week, NQ pulling back into key levels of support. What I'd like to see is the hold of your 21,650 key level on the higher time frames. This is the key level of support in the daily order block. I would like to see this higher low hold for a move back towards the upside on the Qs. So for the NQ, similar thing to the ES, we had that contract rollover. So that happens once a quarter. And whenever the contracts roll over, they'll just roll over into the next expiration. So futures are also contracts as well. So they have an expiration. So that's why they roll over. They roll over once you end up having more volume on the next contracts. So in this case for the ES, it's coming right back down in towards my key area, which is your 21,700. This is the exact level I'd like to see it hold for a push back towards the upside. Currently, right now, it's bouncing off your down close candles here as well, along with their previous resistance turning into support. So for the NQ, if I go back onto this nice rally back towards the upside, for the NQ coming into today, what I'd like to see is the reaction that we have off your 2200. Or 2200 is key here for the NQ. If I actually just go into the 15-minute time frame, this is a key level. You can see multiple touches around this general area. Now that we're above your 2200, what I would like to see is it, right, maintain your 2200 for a push back up in towards your previous day highs, along with the top of the range being your 22,140. So those are the levels I have for the NQ. As for some potential downside that we do have, it's going to be back underneath this 2200. If we consolidate here, break back underneath your 2200, we can see this push back down in towards your previous day close, which is your 21,860. If you go into the QQQ here, key levels for the Qs coming into today, what I do have marked out is number one, 529. And for the downside, sorry, for the upside, what I do have here is your 533. And I would also have marked out as well would be your previous day highs being your 531. I could also have another level marked out here as well. If I just want to mark out more levels, what I can have is your Thursday's low. This is the level I could have marked out. This lines up with the NQ here as well, which will be your 531. So for the QQQ, a hold above your 531, you can see this push back up in towards your 533, which is a pivot level from Thursday. If we end up holding back underneath your 531, we can see a push back down in towards your 528 here on the Qs. Okay, that's it for the Qs. Let's go on to some of the tech names that we have coming to this week here. One second. Just gotta blow my nose. All right. So let's go on to some of the tech names that we have coming into this week. First, we'll start off on Tesla. All right. So coming into this week here for Tesla, what are the major news events that we do have coming up is going to be the robo-taxi event that is going to be on the 22nd, or at least it's supposed to be on the 22nd. So that's going to be next week for this name. Currently on the daily chart, what we have here is, right, we have a couple key levels marked out. We have your 330, and then we also have your 290 here as well. So for Tesla, this is what we have here on the daily chart. If we do want to see some more upside, it's going to have to get back above this 330 key pivot level. So let's go on to the lower time frames. And let's mark out our key levels at least coming into this week. So for Tesla, what we have coming into today, what we have is going to be your 322 along with your 336. So you can see this is the area that we ended up breaking down from. As you can see, multiple touches. Your 336 is also your last week's highs here as well. Coming into today, what we like to see is the reaction that we have off of your 336. So if we can get above your 336, hold above your 336, we can see this continue push back towards the upside. Another possible scenario we have for Tesla is it just consolidates, and then we could be looking for, right, the opening range break to push back up in towards your last week's highs, being your 336. So there's a few scenarios that you could be looking for some more upside coming into this week. All these scenarios are going to be either above your 336 or looking for the trade up in towards your 336. A few other scenarios, at least for the downside, is going to be back down in towards your 322. One possible scenario that we do have is a potential right push up towards your 336, and then we have the rejection, and you can see it move back down in towards your previous day highs along with your previous day close here as well. This is also a scenario that we could be looking for. So for Tesla, I'm leaning at least more towards the upside. So I'd like to see the reaction that we have above your 336 coming into today. We are about up around 2% here for Tesla, right? The overall market is up about 0.7%. You can see Tesla is fairly bullish, at least last week, relatively speaking, compared to the overall market. Let's go on to NVIDIA. So NVIDIA coming into today, NVIDIA on the higher time frame still very much bullish. If we look at this on the daily time frame, you can see that so far we're just consolidating and holding, right, our higher lows, right? Market structure is very much still intact on NVIDIA. Next levels towards the upside, if you can get above your last week's highs, is going to be your 150 along with your previous all-time highs being your 152. So if you go back onto lower time frames here, the levels that I have drawn out on NVIDIA, currently what I just have drawn out is this box. I have this box drawn out, your 145 being the top of the box, and we have the bottom of the box being your 140. And currently the middle of the box, right, equilibrium is your 142. So for NVIDIA, what I'd like to see really is now the break above your 145. Your 145, we had multiple touches last week. We were not able to get above the top of the box. What I like to see now is one of two things, right? Either the bounce off your 142 for a push back towards the upside, or now it's going to be the break above your 145 for this continued push back up and towards your 147 and above. Other levels we can also have marked out here on NVIDIA will be your 143.50s. 143.50s, you can also see we have multiple touches. So this is an area, right? It's inside of your 145 and your 140. You could also be just looking for the reaction off your 143.50 here as well. So coming into today, break above your 143.50, hold for a push up in towards, right, above your previous day highs for a push up in towards your 145. So that's what we have for NVIDIA. Let's go on to Apple. So Apple has been beaten down lately. It also had a event last week as well, being that WWDC. Currently, you can see Apple continuing to show some relative weakness compared to the overall market, right? Apple, you can see in the past 20 to 40 sessions, fairly weak. Whereas the overall market, you can see nice continued push towards the upside. So Apple, definitely one of the names that has been beaten down about 20% year to date on this ticker. Key levels for Apple coming into this week is now going to be, right, your 200 key psych. And we also have, right, your 197 along with your 195. So for Apple coming into this week, what I have marked out here is going to be your 197 along with your 200 key psych. If Apple does want to continue, potentially start finding a bottom based off of this higher low here, what I would like to see is a base and push back up in towards your 200 key psych. I would only really be interested in longs on Apple. I'm actually not interested in longs in the short term just because it's relatively weak. But for any sort of more upside, you like to see it above your 200 key psych on Apple. What I would like to see for some more weakness, if it does stay heavy right underneath your 200 key psych, a break back underneath your 197, and you can see a push back down in towards your 195, sorry, your previous day lows along with your 195. So that's what we have for Apple. This is not something, right, you want to be looking for, right? Day trades towards the upside. Any sort of relative strength has been shorted towards the lows. As for Apple, in a good area, at least on the higher time frames, this is basically the exact area I like to see Apple start bouncing from, at least from a higher time frame perspective. So if you are interested in Apple, right, long term, right, these areas are fairly nice where you have your 195. Of course, your 180 is going to be the best. But around this area, right, anywhere between your 190 and 185 is a good area for Apple for at least a long-term perspective for eventually a pushback towards the upside. Let's go back onto the next chart that we have, which is Microsoft. So Microsoft is a name that's at all-time highs. So this one, if I actually remove all these levels, aren't that useful anymore. For Microsoft, all-time highs was key, right? Your 468. This is where Microsoft gravitated towards after earnings. Nice push up and towards your all-time highs. Now you just like to see Microsoft maintain your all-time highs if you do want this to continue higher. So your 476.30s is going to be key. You can see last week we end up holding this level for a nice push higher. Now the levels we're going to have marked out is just any sort of down close candle. So now breaking above your 475. You like to see your 475 hold. Next levels is going to be your all-time highs, 480s. What we like to see is just maintain higher lows, break above your 480, use this as a retest, and now continue back towards the upside here. So key levels for Microsoft coming into this week is going to be your 480 along with your 475. As for Meta, key levels coming into today for Meta is going to be the levels that we have marked out last week. Exact same level still. Your 680, the low of the range, which is your last week's lows, along with your 694. This is your resistance turned into support, turned back into the resistance. So what we like to see here for Meta is now the break back above your your 694 for this push up in towards your 703. That's the levels we have marked out for Meta coming into today. What we have here on Google is going to be your 178. So your 178, multiple touches. Also your Friday's high here as well. What we like to see is the break back above your 178 for any sort of pushback towards the upside here on Google. As you can see, multiple touches. You can even refine your level here now as well. If you would like to refine it, key level is going to be your previous day highs along with your 178. So multiple touches. This is the exact level that we like to see Google, right, maintain above for this continued push back towards the upside. As for Amazon, the levels I have on Amazon coming into this week is going to be your 214. As you can see, we have multiple touches off your 214. This is the level we tried holding earlier. Also your Friday's key pivot level here as well. Now what we like to see is the break back above your 214 previous day highs. If you can break back above, right, consolidate, we could be looking for this continued push higher. Another scenario, right, break back above your 214 for this push back towards the upside. So you have a few scenarios that you could be looking for today here on Amazon. And as for one of my favorite tickers here is AMD, if you can get back above your 119. So AMD, key levels that we have marked out is your 119.50. This is the area that, as you can see, we have multiple touches. Your resistance turned into support, turn back into resistance. Now you can see we're above your previous day highs. We're above your Thursday's lows here for AMD. What I would like to see now is really the hold above your previous day highs for this continuation back up and towards your 119.50. Another scenario, break above, right, kind of base above your 119.50. You can see this push back up and towards your 121 on AMD. And then for Netflix, this one, not too much to talk about. Key level 112, sorry, your 1211 here is the level that we've been using for the past couple of weeks on Netflix. So coming into today here, what we have on the major indices is number one going to be your SPY 650 here. That's going to be the key level we'd like to see reclaim along with your QQQ 530.90s. Multiple touches, at least right off the bat. What we like to see is the general reaction closer in towards your previous day highs. So that's going to be your key levels for the ES, NQ, along with the SPY and QQQ as well. Your previous day highs reaction coming to this morning. As for some of the tech side, I like Tesla the best for a push back up and towards your 335 here and above. Other levels we can actually have marked out. We can mark out your previous day highs here as well. So we can mark out your 335. We can also mark out your 333 previous day highs in combination with your Thursday's highs here. This is a level we can keep an eye out on for Tesla coming to market open. As for Nvidia, I like this one as well on the higher time frames. Now what I like to see, as I mentioned, break above your previous day highs, hold for this continuation higher. So Tesla, Nvidia, all these ones are looking good as long as you maintain market structure on the higher time frames. Other tickers that continue to look good here as well is Microsoft. As long as it maintains structure, right? This one's an all-time highs play. Meta, if we can reclaim your 694, and then Amazon, if you can get back above your previous day highs, 214 on this name. Okay. All right, that's it for some of the tech names. If you guys do have any names you'd like me to go over, you guys can drop them in the chat and I'll go over them. We don't have any red folder news today, as I mentioned. So that's basically the game plan for today, unless something changes coming to market open. Only thing we do have some orange folder here at 8:30. Besides, I'll go over them. Let's see. Good morning. What's up, everyone? Good morning. Good morning. Space Guru, does he stay and guide you throughout? Yes. Yeah, I live trade every single day. As for this is just the pre-market prep. This goes until around 8:40-ish. Just going over my game plan and what I'm looking for coming into the day. All right, let me go over some tickers, smaller account updates, 5,000 month to date. Should I gradually scale and implement a strict stop loss plan of $50 per contract, aiming for a maximum drawdown of 500? Nice, good job, Wayne. Should I gradually scale up and implement your strict stop loss plan of $50 per contract? So if you have $50 per contract, it really depends on what ticker. I like a dollar amount. So in this case, you mentioned max drawdown of $500 per trade. That's what I would go off of based off of the dollar risk amount. Because if you trade Apple compared to Tesla, losing $50 per contract on Tesla, depending on what expiration is, could be less than 10%. Whereas Apple, it might be like 30%. So you're really basing it off of the strict dollar amount, which it depends on what type of ticker you do trade. CRDO, something I actually haven't marked out before. CRDO, key levels that we do have, or at least the drawings disappeared. In this case, what we have is, right, end up having this nice push higher. You can see higher lows are being built. What I would like to see is this push back up in towards potentially your all-time highs if you can get above your 76 key level. You could have a daily candle close above 76.81. You could see a push up in towards your all-time highs. If we end up rejecting off your 76.80, we're just going to consolidate and form this daily bull flag here on the higher time frame. So CRDO key levels coming into today that you should have marked out right after this big earnings push higher is now just going to be your 76. A break above and hold above your 76. Your next levels is going to be back up in towards your 81, right? Your earnings high after your day one earnings high, basically your 81 key psych level. As for TEM, this one holding key levels, as you can see, right, holding higher lows. Now we haven't been able to close back above your 71.90s. This is really the key level that we have marked out that we like to see TM gravitate towards. Now we end up breaking above your 7190s. What we like to see is a hold if we can maintain above this key level. So for TEM, key levels that we have marked out is going to be your 7190s. If we can maintain your 7190s, we can see this push back up and towards your previous day highs and above. If we actually break back underneath, there is a potential for a reversal on this one since the daily candle has not closed above your 7190. So that's the levels you want to have marked out coming into today. This is a really amazing stuff. Honestly, can't tell you how valuable this is. Glad you appreciate that. Let's see what trade journaling software do I use? I personally use TradeZella. You can use Notion. You can use an Excel spreadsheet. You don't have to use any trading journal if you don't want to. Congrats on the 100K. Appreciate that, Oscar. So for Oscar, as you can see, this one would be news driven. So I don't like marking up these charts as much unless we have a news event. In this case, you can see it has basically just kind of consolidated. It's got a catalyst that can push this name. As for Marvel, this one beaten down. Key levels that we do have for Marvel now is going to be your 6720s, which is the level we already have marked out. See, so far we're bouncing off your 6720s. Now what we like to see is the push back up in towards your last week's highs. So what we like to see here for Marvel is the hold of your 6720s and now push back up and towards your last week's highs being your 71. Key levels that we also have marked out here as well is just going to be the area that we dropped from 6850s, your previous day highs. We like to see it maintain your previous day highs for a push back up and towards your Thursday's highs being your 70 key psych. As for Coin and MSTR, these ones ended up gapping up over the weekend. So Coin, kind of had a push down in towards the low of the range. Now you can see we're gapping up, showing some nice strength here as well, kind of at a key level of support. Now if you go back onto the 15-minute time frame, key levels on Coin is number one going to be the area that we broke down from, your 250 key psych level. You have multiple touches around this general area. So now for Coin, with these gap ups, what you would like to see is just it break above, consolidate, and then continue towards the upside. What you don't want to see is kind of a pop and then it just fade right back towards the downside. So key levels, it's going to be your 250. What you would like to see, as I mentioned, break above your 250, hold for a push back up and towards the next levels, which would be your 254. There's a possible scenario where if you pop above, consolidates, gets back underneath, be cautious of this potential reversal back down in towards your previous day highs being your 244. As for MSTR, similar thing, this one gapping up. Key levels for MSTR that we do have is going to be your 374. And then we also have other key levels marked out. In this case, we can actually mark out some other key levels. Is going to be your 390. So for MSTR, what I would like to see is the break above your 390, hold for this push towards the upside. It's going to be above your Thursday's highs, 390 base for continuation higher. As for Oracle, this is the name I talked about last week for continuation higher. This one very bullish compared to the overall markets. Key levels that we have marked out was your 191 along with your all-time highs. You can see day one, nice push towards upside, and then day two, continuation, the hold above your previous all-time highs. So for Oracle, nice push towards the upside on day number one. And you can see nice consolidation, form this flag pattern, hold above your previous all-time highs, and then we end up having this next leg towards the upside. As for Oracle coming into today, similar thing you're going to have marked out. You're just going to mark out your previous day highs, your 216. What is in play here is a potential opening drive. What I would be looking for would be the break back above your opening range for this push up in towards your 216. What you wouldn't be looking for, in my opinion, would be the break above your 216 retest, immediate retest at least, just because now it's day number 3. So what you could be looking for is the first dip to get bought up, and you look for the reclaim back above your opening range candle for a push towards your previous day highs. If you have an opening push right off the bat, I'll be a little bit more cautious since we are now a little bit more overextended here on the higher time frame. So key levels you can have marked out at least for a potential bounce play. I'm gonna have marked out your 15-minute order block down here, and I'm also gonna have marked out just this level right here, 213. So for Oracle, really what you like to see, bounce off 213, reclaim back above your opening range, right? Higher lows be built, and a push up and towards that previous day highs, along with your pre-market highs, 216.50 on Oracle. As for IWM, key levels that we have marked out on IWM coming into today is going to be your 209 along with your 212, which is the area we broke down from. So 209 so far is holding on IWM. Now what we like to see is a reaction that we have off your 212. These are the areas that we have marked out. You could be looking for the bounce play off 209. You could be looking for the reclaim back above your 212. As for potential shorts, right, rejection off 212, that's something you could also be looking for. All right, AR, I'm not sure if that's a ticker or not. APLD, this one ended up having this nice push. You can see on the weekly time frame, we're actually so far rejecting. So I wanted to see a strong kind of weekly candle close so far. We're coming right back down into key levels of support. This is the exact level we still like to see hold on APLD. We actually can get rid of this one. Pretty big level that we have marked out. As for APLD, key levels is really the area that we broke out from. So we can just mark out this level 1050 here on APLD. You can also mark out another key level as well, which is going to be your level that we actually just broke down from, which is your 1160. So for APLD, a few scenarios that you'd be looking for. Number one would be right your dip down in towards your 1050 for a pushback towards the upside, or now you'd be looking for the reclaim base above your 1180s for a pushback towards the options calls all day. Let's see. Signal breaking up. Yeah, I'm not sure why that's the case recently. I might actually have to restart my internet, but hopefully it's decent. You could also reset it as well. Palantir. Yeah, as for Palantir, this one's at all-time high. So Palantir, we finally are breaking outside. Basically our consolidation here now as well. So let's see if we can have our continuation towards the upside. So for Palantir, key levels that we have marked out is number one, previous all-time highs, 135. This is the level once we were able to reclaim, end up having this nice push back towards the upside on the overall markets. Now the key levels we can have marked out is going to be your 139 last week's highs along with your Friday's highs here as well. Hold above your 139. We like to see continuation. So for Palantir, multiple touches. What we like to see, hold above your 139, push back up and towards the highs. We can actually refine this level here as well towards your 131.90s. So key levels today, 131.90s, hold. We can see continuation higher. If we end up having a big push down right off the bat, there's a possibility where we could see a reversal back down in towards your previous day close being your 138 and below. As for Disney, this one ended up having this nice bounce. So if I actually haven't marked out Disney in a while, but for this one, ever since we had earnings, you can see big gap up and we've been having nice continuation higher. Key levels that we have marked out for Disney now is just going to be your 118. You can see we have multiple touches off your 118. We actually broke above this key level. Next levels is going to be your high that we have at your 123. So that's what I like to see Disney get above, is if you can reclaim back above. Now it's going to be your 118. We can see this nice push back up and towards your 120, which is your last week's highs, and potentially even your 123 in the near future. So key levels you're going to have marked out. We could even refine this a little bit better. It's going to be your previous day highs. If you can break back above your 118 on the higher time frame, as I mentioned, you can see your last week's highs. Is your stop loss always the one candle rule? It's always the point of invalidation. If my point of invalidation is the one candle rule, I personally don't call it the one candle. It's just an order block. So I call it an order block, or it's a point of invalidation. Where your stream is trading, that's in Discord. Palantir, XOM. So XOM most likely getting some buyers that are kind of stepping in just with the current kind of economic situation. What we do have on XOM, you can see, right, it's starting to push higher here only because we have some external factors that are affecting this stock. Key levels that we have now is this daily gap that we can draw up. We can also mark out a few other tickers, a few other levels here as well. So we have the top, we also have the bottom. Let's actually just redraw this out. So we can mark this out, which is going to be your 112. You can also mark out your 110.80s here as well. What we like to see for XOM is the reaction that we have off of your 112 along with your 110. Key levels today, right? Potential kind of rejection fade off your 112. Another scenario, right? Consolidation, right? Push back down in towards your previous day lows. For upside, for me, it's going to be a little bit more trickier with all these like pre-market key levels. But what I would like to see for upside is the break back above, your 112.25 and a hold for this continued pushback towards upside, right? You can see consolidation, break up in towards your 112, and then potential next move higher. As for HIMS, this one's consolidating. So I talked about HIMS for a while now. Consolidation, it's going to form this huge kind of flag pattern that we have. Key levels that we're consolidating in between so far is not even this box. We can even draw this box here as well, which is your 58 down in towards your 52. Until we can have a daily candle close above 58, this one's just going to consolidate in a very tight range that we do have. So for HIMS, key level is going to be your 58 along with the low of the range 52. Break above your 58 and a hold, we can see this continue push higher. Besides that, so far every single pop has just been shorted, right? Rejections off highs and bounces off your lows. All right, let me scroll down here as well. Okay, let me scroll down. Gold, what platform do you use? I use TradingView, my broker. I use Interactive Brokers, lots of buffer. Yeah, you might just have to reset it. I'll try and reset my internet in a second here as well. All right. I went over a decent amount of tickers. I am going to go over my top watches, and then I'll call it a day. Do you share your watch list? Yeah, that one's in the description. I have just a free watch list. It's more of a video. I wouldn't consider it watch list, but it's just like a video, kind of just recapping, a quick recap of what I mentioned here in the pre-market. So for SPY coming into today, key level is going to be our 600 key psych. As I mentioned, if you can get above your 600, get above your previous day highs, we can see a push back up and towards your Thursday's highs and potentially your last week's highs. As for Qs, similar thing here. What I would like to see is the break back above your 531, right? That's going to be the key for some more upside, at least coming into today. If we do just reject off your 531, we're just going to come right back down in towards your previous day close. As for my main watches coming to today is going to be Tesla. What I would like to see is the reaction that we have off of your previous day highs along with your last week's highs. If we can get above your previous day highs, we can see this immediate kind of retest up in towards your 335, which is your last week's highs. Another scenario that we could be looking for is the consolidation. And then once we do break above your previous day highs, we could be looking for immediate retest higher. Those are the scenarios I'll be looking for on Tesla. As for NVIDIA, we do have a gap backed up in towards your 144 key level 14. Other names that I do like, Palantir, this one's continuing to show some strength above your previous day highs along with your last week's highs here as well. As long as we maintain your 139, we can see this push back up in towards the upside. This one is an all-time highs play, so we can keep an eye out on this one. And then as for a few other names, Oracle, potential kind of dip and rip coming to market open, right? Dip down in towards your 213, right? Reclaim. Either way, you're going to be looking for the reclaim. So it's going to be based off of an intraday setup reclaim for a push back up and towards your previous day highs. Yeah, I'm not sure if that's the case. I'm actually just going to reset my internet once I get off. But yeah, hopefully that is going to be fixed by tomorrow. If you guys did enjoy that, I appreciate if you guys drop me a like and sub, and I will see you guys all tomorrow morning. All right, take care, everyone. Have a great rest of the day.